Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
Hello there, I am Yatin Mota.
And Yatin, I can see the smiles on your face. You know, it's been such a memorable week, Yatin, given the fact that, you know, Monday we saw a stupendous rally play out. Tuesday we saw a big crash come in. Last 2 days, the recovery has been there, but it's been a choppy recovery.
Correct.
But today, the bulls have really roared back into life and, you know, they've made a decisive comeback. Sensex hitting a fresh high. Did you, by any chance, on Tuesday,
nobody
imagine
has
that we'll
expected this kind of rally. I think, let's be honest, the kind of move the markets has given has surprised everybody. From institutional investors to HNIs to retail, everybody is surprised with the kind of momentum that we have seen. So yes, a surprise move, and Nandita, as you were mentioning, that who expected that the last Friday level would be breached, and the kind of dip that we saw on Tuesday is now fully recovered.
Fully recovered, and in fact the Nifty also managed to get past that 23,300 mark at one point in time, and the Sensex, of course, a fresh record close coming in there. But look at the broader end of the markets. All round cheer was there. Mid and small cap indices gained in excess of 2% apiece. NSE advanced decline ratio was almost 5:1. All the sectors were leading today. The biggest gainer was the IT pack, followed by autos, banks, energy, realty. All of these indices were up in excess of 2% or thereabouts. Of course, let's not forget that there has been some cheer with respect to RBI decision as well, because they have upped or hiked the growth forecast to 7.2% for FY25 from 7%. After the election verdict, people weren't sure whether or not there will be an upward revision or any kind of revision in inflation and growth forecast. But yes, the markets welcomed this revision in GDP forecast with open arms, and that's also one factor that may have led to today's rally. But if you look at the individual movers, Yatin, M&M rallied 6%. For the week, that stock is up 14%. Wipro, Tech Mahindra, Infosys, all of these IT names, as I said, IT index was the top sectoral gainer today. So all of these gained in excess of 3%. You also had Bajaj Finance. That stock was, among the top Nifty gainers as well. What didn't do well, Yatin, was only two stocks, SBI Life and Tata Consumer. These were the only laggards. But from the broader end of the markets, IIFL Finance was one stock that was up and about 15% up. Yatin, what was the action like in the broader end of the markets?
I think, overall the action was quite strong. In fact, a few PSU stocks were also making a comeback. But if you talk about Nifty 500, IIFL Finance, that stock moved 14%. Obviously, the reason being that the RBI special audit is over and probably the market is expecting a favorable outcome. Tejas Networks, Praj Industries, Amara Raja Batteries, and that stock has zoomed another 10% in trade today. What was not doing well, some profit taking, minor one in Finolex Cables, Anand Rathi, RT in India. But yes, a few technology stocks were doing well in the mid-cap IT space, and we had likes of Sonata Software. That stock moved 8% higher. Scient, that IT stock moved 7%. Keynes Technologies, in the electronics manufacturing space did well. Motilal Oswal Financial Services also up 6%. So yes, the broader market also was participating in this particular bull rally.
All right, of course, all round cheer coming in. But with that, let's break it down and see what kind of stocks are on our radar this afternoon. Starting with Wipro, Yatin, among the top Nifty gainers. IT stocks, of course, have been out of favor. But off late, since Tuesday, we've seen a very strong up move coming in the IT pack as well, aside of FMCG, given the fact that people have been rushing into defensives after the kind of crash we saw on Tuesday. So today, Wipro particularly is on my list because it has bagged a $500 million deal from a leading US communication service provider. The name of the company is not known, but the Wipro will be providing managed services for some products and industry-specific solutions. The deal spans a tenure of 5 years, and incremental revenue addition from this deal could be around 0.8 to 0.9% to revenues in FY25. Remember, this is the first major deal win under the new CEO Srini Pallia, and despite that, that I think brokerages are still a little cautious or underweight on IT stocks. In fact, Morgan Stanley in particular is underweight on Wipro. It has set a target price of 421 rupees, which implies a 12% downside. Mega deal could be seen as a positive. That's what Morgan Stanley is saying, because discretionary demand remains soft, and a $500 million deal win in such an environment is a positive. But near-term growth may lag vis-a-vis peers unless the gap with peers narrows. Even in terms of PE multiples, the gap with peers could remain as wide as it is right now. But with today's move, the stock has turned positive for the year, Yatin. Half of the analysts who track the stock still have a sell call on the stock. The other half is either neutral or has a buy call, but half of the analysts who track the stock still have a sell call. But renewed buying has come into IT stocks. Let's see how things pan out from here.
Absolutely, and Wipro, that one stock, $500 million of contract, clearly making the difference. But Nandita, given the fact that it was a heavy week on elections, let's also try to understand what brokerages are making out of this. We have the famous market strategist Chris Wood coming out with his greed and fear report post the Indian elections. He does believe that yes, the mandate has surprised most of the equity market participants, with the BJP not getting a majority this time, and clearly the move would be to revive consumption, and that too rural consumption, and probably that is the reason why he has made changes to his model portfolio. Two other more things apart from the model portfolio which we'll talk about, but he believes that from here on RBI will have headroom to cut rates, and that could be a reason why that RBI has today revised the growth estimates. Probably the lower rates will be boosting consumption, and today in a surprise move already we have the ECB which cut rates by 25 basis points, which is the European Central Bank. Now, when you talk about the model portfolio, we have Chris Foods of Jefferies, which has changed its stance, and lesser weight has been now given to the PSU stocks. So stocks like SBI in the PSU sector, in the private sector we have ICICI Bank and other few stocks, including HPCL, BPCL, and all a host of these stocks. The weightage has been reduced by 100 basis points each. So 4 stocks in the list get weightage which is lower than what it was earlier, and the entire 4 percentage points weightage has been now allocated to Policy Bazaar. Obviously, the fact that India's insurance is underpenetrated and probably moving away from certain PSU stocks to private sector companies, Jefferies has done this move. They've also said that the stocks which could probably benefit from here on would be FMCG stocks and private consumption names, and clearly the weight change is coming because of that. Now, JSW Energy in their Asia Pacific portfolio ex of Japan also has seen an increase of 1 percentage points in allocation for JSW Energy. So essentially 2 stocks to focus on according to Jefferies. Number 1 is JSW Energy, and number 2 is Policy Bazaar, which could be against weight cut for ICICI Bank, SBI, REC and Coal India.
Right. Yatin, you were also talking about OMCs. There are fears that the OMCs could see a derating in case populist measures are taken.
Right.
But towards the end of the session, all these counters, HPCL, BPCL, IOC, they saw good traction, and they also joined in the rally. But let's also talk about another pocket that's been in focus, and that's a specialty chemical or chemical space. A lot of experts I speak to, Yatin, say that maybe it's a good time to rotate into underperformers like the specialty chemicals pack. But right. Morgan Stanley, has taken a contrarian view. They've said that this pocket is still not out of the woods yet, and it has downgraded a number of counters. It has underweight rating on some of the counters as well, and it has cited factors like uncertainty over recovery, competition, and of course there's the China dumping factor as well, which could delay recovery for some of these companies. So it has downgraded the likes of Aarti Industries and SRF, and has maintained an underweight rating on Tata Chemicals. For Aarti Industries, it says the stock has run up quite a bit since November, and it has cited that as the main reason for downgrading the stock. It has assigned an equal weight rating now, and the target price has been kept at 613 rupees on the stock, which has actually also cut its target price on SRF by over 17% to 2,115 rupees. Now, for key risks for SRF are it's of course the factors that I mentioned: uncertainty over recovery, competition, as well as extended downturn in its packaging business as well. That's also one of the reasons that's been cited by Morgan Stanley to downgrade SRF. In terms of Tata Chemicals, it has downgraded the stock, citing oversupplied soda ash market. Demand is not there, but there is an excess supply, and it has cut its target price by 7% to 843 rupees or thereabouts. It has also pointed out or noted that volume traction may improve across multiple end markets, but it will be tempered by competition and uncertain pricing environment going forward. And it has categorically said that it will remain on the sidelines until and unless an upcycle in earnings kicks in. Well, of course, earnings for chemicals weren't good due to lack of recovery in global chemical industry as well as China dumping. So, all in all, Morgan Stanley has said that the sector is not out of the woods yet, and they will be on the sidelines at the current juncture.
Absolutely, and clearly, I think the election, the cabinet formation, the oath taking, the union budget, maybe before July 15th or around that time, are the key events to watch out for. Whatever stocks, Nandita, we are discussing, probably the fortunes will change with the government formation and the budget. So, yes, a lot of events. Stay invested probably, but yes, do take advice of your investment advisors because this is a volatile time for the markets. We saw dips, we saw highs, we saw volatility, we saw ups and downs. So, be careful as a trader, keep your stop losses in place. And obviously, when it comes to long-term investing, India's story is intact. Let's hope that the government formation, the cabinet and the budget brings in good news for the Indian stock markets. Stay tuned to Moneycontrol for all your business news and updates. Thank you so much for watching.
Thanks a lot and have a great weekend.